This video chart presentation of Fancamp Exploration brought to you by allpennystocks.com. Fancamp trades on the Toronto Venture Exchange, our ticker FNC. It's one of our Canadian technical stocks to watch this week. So you had a nice day yesterday, closed up almost 10%. Volume dropped just a little bit compared to the previous days, but it's still trading slightly above average for the last 3 months. The most important thing with this chart, and the reason it's on the watch list, is this 15-cent bottom support, basically forming a double bottom pattern, with resistance really not coming into play until up around 20 cents. So we'll take a quick run through the indicators. MACD is definitely showing a shift in trend. Nice upward path for the MACD. You can also see a little bit more closely. Histogram bars trending back towards zero, which tells you it looks like the 12 is going to pass through the 26 EMA, which of course is a bullish signal for trend. Similar look with the PPO. ADX, referenced this many times. For liquid stocks, when it gets down near 10, look for a shift in direction, for some strength to be added. Because when the ADX is registering that low of a value, there's really no strength any direction, and it tends to not want to stay down there very long. A direction will get picked and the ADX will start rising. Money flow index, it's been bearish for over a month, holding below 50, but we're seeing a rise over the last few weeks, saying that people are starting to pay higher prices for the stock. A break of 50 and a hold above 50 is ideally what I look for. Accumulation distribution, this is not a great look. Broke through the bottom side of this long-term channel it was in, basically had been flatlined. You can see that a little bit more clearly in the Chaikin money flow, which is based upon the accumulation distribution. By being down in the red, it says over the last 20 periods, selling pressure is outweighing buying pressure. The CCI is moving back upward. A break of negative 100 will be used by bottom feeders as a buy point, and it would be a hold unless it breaks back down through negative 100. It's obviously a very early on indication. Per the definition of the CCI, the buy point technically is until the break of 100, but bottom feeders use it a little bit differently. They use the break of negative 100 as an early buy point in the chart. Full still in bear chart territory by registering below 50. But again, showing a little bit of upward pressure, a little bit of momentum starting to build in the stock. Tricks, it tends to basically track the MACD as it's also a gauge of trend, but it's triple exponentially smooth and it moves much slower. I look for something along those lines. I want to see higher lows continually be made and the upward channel to be established. RSIs are also at a critical point. The break of 50 is the move into bullish momentum. And you can see all three components registering right at that point right now. Relatively neutral. Bulls and bears appear to be duking it out to try and gain control. All those indicators basically just lay the groundwork for this idea of holding this bottom support. It does pick up a little bit more at 15.5, but the key point for me is 15 cents. If it falls through that, for me it would be a walk away from it play, wait for some things to set back up and look a little bit better, because it is in a pretty strong downward channel for about 9 months now. If that 15-cent mark falls, there's not really any support in sight. To the upside, there's a little bit of resistance at 17, but I don't see resistance getting heavy until the 20-cent mark. That's an important level for it, not only because it frees up an area to the next resistance point around 24 cents, which is a pretty substantial upside from its 17-cent close on Tuesday, but also because it'll be the first time that the stock is actually trying to make some new higher highs. You can see through here, it looked like it was trying to bottom out, but then couldn't push through 32, 32.5, drop lower, can't make any new highs. To complete this double bottom pattern, it's going to have to blow through 20 cents, and if it does, I think the odds are pretty good it might come up here and challenge 24. 126,000 shares traded on Tuesday. As I mentioned, that's about average for it, maybe slightly above. I would definitely look to see some bigger volume days for this to really try and gain some strength and gather some momentum to try and take up that 20-cent point. If the chart decides to sit down here on this 15.5 cent mark, I want to see volume continue to dwindle, and then I'd look for the surge to show buying pressure coming into the play. Those are the type of things that I look for in the FNC chart, but as always, it's merely my interpretation. I'm not a financial consultant and strongly encourage you to do your own proper due diligence. Consult with a qualified financial advisor before making any investment decisions. Past performance is not a guarantee of future results. Please visit the allpennystocks.com website to view the full disclaimer disclosure. I do not base any investment decisions on any material found on the website and/or this video chart. No person employed by All Penny Stocks is a registered investment advisor or licensed broker-dealer. Thank you for watching and trade smart.